Hey everyone, Doc here. So this video is actually a redo of a session that I held with my Discord group, a private session, going over Fibonacci retracements. And of course, as luck would have it, my markup tool did not get recorded, so the video wouldn't make sense to those who were unable to attend the live version to watch the video later. So I'm redoing this video. So basically, let's get started here. So Fibonacci retracements, let's break down the two words. A lot of people have a pretty good idea of what they think Fibonacci retracements do, but we'll dive in a little bit deeper and hopefully you'll pick up on some things that maybe you didn't know. So let's break down those two words. Fibonacci, so Fibonacci are numbers based on the Fibonacci sequence, which we'll go over in a minute. And retracement is, basically just another word for a pullback, right? So this is pretty much a buy the dip, sell the rip strategy, of course. And we hear that all the time. Buy the dip, sell the rip. So that's what this is all about. So what are the Fibonacci numbers or the Fibonacci sequence? What is that? Well, basically, there was a guy named Leonardo Fibonacci, and he created this famous mathematical formula. And he was an Italian mathematician born in the 12th century. He created this formula, and as people later discovered that it was, had a lot to do with nature and maybe the universe and things like that. And so some people really believe that it's nature's universal code or the secret code of the universe, things like that. So, maybe that's true. I have no idea. I'm definitely not a scientist here. But some examples of that, just to give you just a little bit of background on that. So some examples are, some people think that the shape of the galaxy was, created or has the Fibonacci sequence within it. The code used to build the Egyptian pyramids. This code has apparently been proven mathematical concepts or theories. It's found in Mozart's music. It's found to be accurate in the growth of certain plants and seashells, like the nautilus. If you take two consecutive numbers here and there, the first number being the miles, the next number to the right of it will be its equal distance in kilometers, which is pretty interesting. It's been seen in hurricanes. It's been seen in, people think that it's in Da Vinci's Mona Lisa painting. The honeybee family tree apparently follows the fib sequence in certain parts of the human body, like the ear. But anyway, you can Google that stuff and come up with a lot more interesting facts about that. Do they work because of this magical code? Well, I don't know. Like I said, I'm not a scientist, but my thoughts are likely not. I believe more that when they do work, they work because other traders are trading off of these fib levels and entering the trade at around those levels. And, we can certainly, by that happening, we can kind of be in a self-fulfilling prophecy effect where, basically we just make it come true. So let's take a look at what these numbers are and how we come up with them. So first I'm going to draw a Fibonacci retracement just on this chart so we can just check it out. So what these numbers are, basically we start with a 0 and a 1. So we'll start with a 0 and a 1. And how we come up with these numbers, we just add the two previous numbers together. So 0 plus 1 is 1, right? And then 1 plus 1 is 2. And then 1 plus 2 is 3. And 3 plus 2 is 5. 5 plus 3 is 8. 8 plus 5 is 13. I promise I'll finish here in just a minute. 13 plus 8 is 21. And 21 plus 13 is 34, right? Okay, so, these numbers keep going on and on, to infinity, basically. So, and how do we come up with these levels, though? Because you're probably looking at those numbers and going, well, hey, Doc, those don't really correspond to any of these levels here. So how do we come up with those levels? So the way we come up with those levels is so if we're trying to get the 0.618 level, then what we would do is we would take any number and divide it by the following number. Okay, so let's take 3 divided by 5. See what we come up with there in my handy dandy calculator. So that's 0.6. So let's take 8 divided by 13. That's 0.615. So as you get further into this chain of numbers, you end up getting closer and closer to that 0.618 level. So that's where they come from. And then when you're looking at the next level, then you take any number and then you skip a number and divide it by the second number ahead to get your 3.82 level. So if we did 5 divided by 13, so 5 divided by 13 is 0.384. So pretty close. And like I said, as you continue on, they get a little bit closer. Same thing with the 0.236 number, but we skip 2 numbers and we do the third number ahead. So let's do 5 divided by 21. 5 divided by 21 is 0.238. So getting pretty close there. But anyway, that's how those numbers are made. So if we take this, if we come up with that 0.681, they're just converting that into a percentage. So it would be 61.8%, and that's going to be our fib level here. So that's how they come up with the numbers, in case any of you were curious about that. Not that it makes a whole lot of difference. All we care about really is that it works, right? Okay, so we have our fib drawn here, our fib retracement. It may look a little bit different than yours does, and that's okay. My settings are likely different than yours, but I'm going to show you how to set it up real quick. So let's see here. Go ahead and remove this drawing. So to set up the fibs, you just go, if you're on Thinkorswim, you go to Drawings, Drawing Tools. You go to the percent sign. If you hold it there for a second, it'll show you this Fibonacci Retracements. So we'll draw one here. And then you can right click, or if you're on a Mac, command click, edit properties. And then you can actually make your changes here. If you want to change the colors, you can change the colors. If there are any particular levels that you're interested in keeping an eye on, you can certainly do that. This is how I have mine set up. And I actually have my extensions built into there as well. I have them turned off now for the purpose of this video, so it doesn't get confusing to anyone. But I primarily, and my group will primarily, keep a watch on the levels that are colored here. This 38.2, this 50, and this 61. Not that these other levels don't matter, because they certainly can, but what I found with the type of stocks that I'm typically trading, that these are, I've found that these are really key areas that I tend to look for a bounce, basically. And that may be because, the stocks that we're trading are these, hot stocks that have a lot of volume. They're really moving pretty quickly up. And so we tend to a lot of times see a more shallow pullback on these types of stocks. We might get a pullback at the 50, or we might get a pullback at the 30, 38. So, and other stocks, that are maybe not moving up quite as fast, or maybe you're trading, Forex pairs, or you're trading maybe E-mini futures, the S&P E-mini futures. Those types of stocks, people are going to pay a lot more attention to these lower levels, these deeper retracements, like the 61.8 and the 78.6. I can tell you this, I can tell you that from my experience, this level right here, this 61.8 level, is probably the most favored level, the most trusted level, the one that people look at the most, no matter what they're trading. But anyway, you certainly want to back test this for yourself and see, based on what types of stocks that you trade, where you're seeing the majority of these pullbacks, taking place. So, okay, and this 78.6 is the square root of 61.8, and certainly has some significance there. mean that this 61.8 is a pretty popular level. So basically, these numbers, like I said, are converted to percentages. Now, this 50% level is not really a fib level, but if you do take, we have the numbers 0, 1, and 2. So if you were to take 1 and divide it by 2, of course, you do come up with that 0.50, which gives you the 50% level, but it's not typically regarded as a true Fibonacci level. But in the trading world, the 50% level tends to be pretty important. People pay a lot of attention to it, so it is implemented into the Fibonacci retracements. And we do see bounces there, of course. All right, so I would say that the 38, the 50, and the 61 are likely the most popular for day traders, and again, the 61.8 being probably the most popular of even those three. So, and why are we paying attention to those particular levels? Well, we're paying attention to those levels because since they are the most popular levels, or they seem to be, then that's where we can expect to see other traders paying attention to those levels as well. So you can see more support, buying support coming into those levels. The more traders that are looking at it. Same thing with VWAP or moving averages or any other popular indicator that other traders are paying attention to. Those are the ones that we want to pay attention to as well. That's why it's so funny to me sometimes when you see these trading gurus, on their website or on YouTube, they're trying to sell you this super secret, fabulous indicator for $999. Well, if it's super secret and no other traders really know about it, then they're probably not trading it. And if they're not trading it, why is there going to be any buying support there, right? That always kind of gives me a chuckle. But, okay, so one thing to keep in mind, with these lower levels, you can see some fake outs, these shallower levels. So if we have a move from here to here, and then we have a pullback to this 38.2, I've seen many times where you have a little bit of a bounce here, and then it comes right back down, maybe bounces here again in between the 38 and the 50, and then comes back down, and the real bounce happens at the 61.8 level or wherever. So I don't know if that's could be, market makers that are doing that, basically trying to use us as liquidity or whatever else. But that's something to keep in mind. So I have found that on certain stocks, depending on what it's doing, that you can end up getting a little bit of a fake out on some of these shallower levels. But the same thing can happen to you as well on the deeper levels. So if you're pulling up, basically the stock's moving up here, makes this nice move up, comes back down, maybe bumps here a little bit, comes back down, bumps here a little bit, comes back down, and then you think, well, okay, hey, great, this is looking good. I'm going to grab this at this 78.6 level, right? And then it comes right back down and just ends up selling off of that level, comes down here and just kind of tick-tocks after that. So both of them can be dangerous. You just have to keep an eye out. This thing doesn't work 100% of the time, obviously, but those are a couple things to keep in mind as far as, shallow levels versus deeper levels. Just going to depend on what the stock's doing that you're currently trading. Okay, so we talked about fake outs there. Some traders will actually, they won't even take a trade off of the 50 or off of the 38. They'll only take trades, off of the 61 or off of the 76. Everybody kind of has their own rules that they've implemented for themselves based off of the Fibonacci retracements. I'm sure that they've done their back testing, of course, to see what works best for them, what their, works best with their strategy, works best with their trading style, their trading rules, their risk management plan, of course. So, I always say this, and it's really true. If you ask, 100 different traders, you're likely to get 100 different answers on just about anything. But you have to basically find out, dial into whatever you're looking at, whether it be an indicator or whatever it is. You have to dial into it, back test it, and see what works for you. Just because one indicator works for trader A doesn't mean that it's going to work for you, right? I've seen many times where somebody's using a particular strategy and they're just killing it. and then someone else goes and does the exact same thing that they're doing, that strategy with those rules and everything else, and they just can't make it work. So you have to find something that works for you. Just because it works for one person doesn't mean it's going to work for everyone. All right, so so fib levels are basically just percentages of a pullback. So if we take the same move here, and I'm going to show you guys some real moves here soon. We have this same big move, right? So let's say it pulls back to this 50% level. So all that's saying is at this level, if it pulled back here and just shot back up, all that's saying is it pulled back from the original move from here to here. It pulled back 50% of that original move, right? I know it's probably common sense, but I'm going to throw it out there anyway, just in case anyone wants a little extra clarification on it. So if you were driving to visit mom and she lived 100 miles away, when you got there, you visited for a few hours, and then on your way home, when you're 50 miles into your drive on your way back home, you'd obviously be at the 50% retracement level. So I'm sure that makes perfect sense. So when can we look to use Fibonacci retracements? Well, we can look to use them. We see a lot of times where a stock will do this kind of move here, right? And let's say it doesn't hit the scanner yet. So it's been ticking up pretty good, but it didn't really have enough volume to ping the scanner yet. So you didn't see it until, let's say, this level on the scanner. By the time you pull it up and you're taking a look at it and you've checked the stock out, what it's doing, maybe it's already right here, right? So you think to yourself, well, that's a little bit late getting in on this particular move. You don't want to FOMO in. You don't want to be buying at the top. So what do? Well, this is where Fibonacci retracements can come in handy. So we wait for the pullback, right? So what we would do is we would take a fib retracement. Let me get rid of this one here real quick. And we would draw it on this move while it's pulling back. So we're seeing that it's pulling back, right? So we have time. Hopefully this thing's not going to just roar back up. Hopefully we'll have enough time. It takes just a second to draw this level here real quick. So we're going to draw this move before we saw this big pullback here. And then we start looking at where we might be pulling back, which in this case, we moved up this way, on up to here. Here's our move that we drew, right? Now we're seeing a pullback, bounced a little bit off the 23.6, tried to go back up, got sold off below the 23.6, popped back up, got sold off again, came and bounced off of the 38.2, broke below it a little bit, bounced pretty decently off of that 38.2 level, all the way up here. Now keep in mind, some traders will say, well, hey, if this thing doesn't bounce pretty much right around this level, if it bounces down below like it did down here, or if it, retraces below like it did down here, they're not going to mess with it. So some people say, well, I'm looking for an exact retracement to an exact level, right? That's totally up to you, up to your risk tolerance, whether you want to take those trades. Some traders will take those trades and they'll pick them up even though it did dip below that 38.2 level. They'll pick them up, ride it back up here, and then they'll maybe scale out on the way up, or they'll dump it all away whenever it gets to this level or that level there. And some will just hold on to it and see if it goes any higher. Again, totally up to you, totally up to your risk tolerance level. Okay, all of this is just speculation, right? And it's going to differ with every individual trader, and their trading style and their strategy and their risk management plan and all of those different things. Maybe that fits better for them waiting until maybe they back tested it and they've seen that, from the stocks that they've looked at and back tested, that every time that it, pulled back specifically to that level, they had a better winning percentage. So maybe that's the way they're going to trade that. Other traders may have different results, and so they may trade it a little more aggressively. Like I said, 100% up to you. You just want to back test it, come up with your own rules, and then trade your plan. Okay, so when are other times that we can use Fibonacci retracements? Well, we just talked about using them after a run that maybe we missed. We were a little bit late seeing it, noticing it, whatever else. Then now we're going to look for a possible pullback opportunity, right? And you want to use it on a trending stock. So you want to use it on a stock that's doing something like this, right? It's going up, and then it has a really significant move to the upside, right? We don't want to use it on a stock that's trading like this, right? What do we want to use when we have a stock that's trading like this? We went over this in our session a few weeks back. On something that's trading like that, we would want to use just a regular old trend line, right? So maybe we draw some trend support here. I'm just going to draw this pretty quickly. It's not going to be perfect. Neither is my little chart drawing there. But anyway, we draw a couple trend lines, and that's how we trade that. You're not going to measure these smaller moves with fib retracements because that's not really what they were intended for. They're intended for stocks that are trending. You know, they're trending up or they're trending down if you're, looking to, short a particular stock. We're not going to trade these guys with fibs. So keep that in mind. Trending stocks. We want stocks that are making higher highs, making higher lows, or if you're on the short side, you want to look for a stock that's making lower highs and lower lows, of course, right? Because fibs can be used to short as well. Okay, these stocks that are tick-tocking, they don't have any real general direction. They're just basically trading sideways, and you don't want to use fibs for that. Use your regular old trend lines for that deal. Okay, so we're looking for big, energetic moves with a very noticeable swing from a low to a high, or again, from a high to a low if you're looking for a short opportunity. And we draw fibs at 2 points like we did here. We clicked here, get off of this, we clicked here on the low of the move, then we clicked here on the high of the move. Just 2 clicks. You can do it very quickly. A lot of people are a little bit worried, well, hey doc, whenever this stock's just going crazy like this, I'm not going to have time to be going to my Fibonacci retracement tool and drawing this thing while this thing's just blowing up. Well, yeah, you probably will, because keep in mind, you're gonna be looking at drawing that Fibonacci retracement once the pullback starts happening. And typically, if it's not going to be much of a pullback, then you're not ready to draw your Fibonacci retracement anyway. Because likely, if it just pulls back a little bit, then that particular move is not over. You're looking for a noticeable pullback, right? So that you can identify that low to the new swing high, if that makes sense. This is a great move for that because if you look here, we did make a higher low and we did make a higher high. Don't know what happened there. Get rid of all that. Okay, sorry about that. All right, so it's also nice to use, like I said, when you missed the first run up, you're late seeing it. We see this happen all the time, but you still would like to, have a possibility to make a trade on a hot stock that's trending up, right? And you can use those fibs to identify a possible area of a bounce and a continuation of that upward trend. You want to match these fib levels up with other support areas. That can really increase the probability of the trade, right? If you're looking at these fib level trades, if you're back testing them and you see, well, hey, every time it bounces off of the 50% level, well, it has a 42% success rate. But every time it bounces off of the 50% level and it has some, older support there, then maybe it has a 53% success rate, right? So you want to look at other things. Is it bouncing near some old support? Is it bouncing near VWAP? Is it bouncing near a support trend line? Is it bouncing, near a significant moving average, right? These are all things that you want to look at. And the more indications that you can have that are giving you a thumbs up, then the likelihood of your trade going for you is better, right? So that's why we want to match these things up. Okay, so let's talk about where we can use stop losses when we are dealing with Fibonacci's, right? So really, again, this is up to you. All of this is going to be, of course, contingent on the fact that it meets your risk management plan, that it doesn't go over the amount of money you're willing to lose on each particular trade, right? So let's say that we have this this scenario that we're looking at right here. So it goes up, and I had it on the wrong button, of course. So we're looking at this same move here. Let me put my handy dandy tool back on. So this move here, it goes up, pulls back down, hits the 38.2, and starts to move back up. So you hop in the trade here. You want to take an aggressive trade off of this 38.2 because you see a nice bounce going, and it has very good corresponding volume down at the bottom. So you see there's a lot of energy in that move. So you're going to hop in that trade. Well, some traders will put their stop loss just below that fib level, right? Some traders will say, well, hey, instead of putting it just below that fib level, I want a little extra room so I don't get stopped out. So I'm going to put mine just below the previous fib level, right? And this is, of course, keeping in mind that there's no other key support in this area. Like this particular one has some key support here at 805, so maybe you might want to put it just below that 805, above the 50. Okay, or some people say, well, hey, I'm going to go down 2 fib levels. If your risk management plan allows you to do that and it looks good to you, and that's what you want to do, then go for it. You can put it below this 61.8 level, right? We don't ever want to put our stop loss, though, above. So if we were doing, let's say this support level right here at 805 wasn't there, and you said, well, hey, I'm going to put my stop loss here just above the 50. Well, what if it breaks down here? Let's say if it continued on up here, but it broke down here, it came down and bounced off of the 50, stopped you out because you had yours above the 50, and then rallied on back up. So keep that in mind on your stop losses. Just make sure that wherever you do decide to put your stop loss, that it does not go against your risk management plan. Very important there. It's just not worth it. So those are some areas that you can put your stop loss. Keeping in mind other key support areas, a VWAP, moving averages, trend line support, anything like that. You can always put those stop losses anywhere below, just below those levels. Okay, so what are some things that we can possibly expect when we're using Fibonacci retracements, right? Why we're using them, what benefits can we expect from them? Well, some benefits, some not, right? Well, the number one I would say is you cannot expect for it to work 100% of the time. You know, I don't know that there's any indicator out there that works 100% of the time. If there is, please send me a message and let me know what it is. I would love to know. So more times than not, though, if you draw the Fibonacci retracements correctly, and if you draw them on the correct move, you don't draw it on a small move like here, right? This small move here. This is not a significant move, okay? You're not drawing it there. You're not drawing it in, anywhere that isn't significant, and you're drawing it correctly. I would say that more times than not, it does work, okay? There's a lot of people, like I said, again, if you ask 100 traders, you're going to get a lot of different answers, but there are some people that just don't believe in them at all. They think they're just a joke. They don't work whatsoever. And then there are some people that just live by them and think that, they're just one of the best indicators out there. So once again, up to you. You back test it. You see if you like it, if it works for you. There's nothing wrong with ever having an additional area of support that you can possibly focus in on, right? So, what's another few lines on there? As long as your chart's not all mucked up with, a whole bunch of indicators, you should be fine. And you can certainly play with it for a while and see if it speaks to you. So one of the things that we also can expect, and let me show you an example of this, is whenever we're on a move that ends up being the top, then these Fibonacci retracements, they're not very accurate. So let's look at this move here where we actually hit the top, okay? Let's use this one. We're not going to use this move here. Let's just use this bigger move as an example. So we went from here to the top up here, 1025, right? Right there. And I'm on trend line, of course. Give me one moment, guys. Switch this back over to fib. Okay, so let's try this again. So from this move here to this move up here at 1025. Okay, so there's our move. So this would be an example of when a stock hit the top, right? And it hit the top for the day, and that's it. That's all it did for the rest of the day. It never broke that high again. Well, this is going to be an example of where the Fibonacci retracement's not going to be very accurate, as you can see by this move. And we did see it come up to here, this level here, right? It came back down, and it did get somewhat of a bounce off of this 38.2, and someone who's quick with a scalp could have gotten in there and grabbed some profit. But it ended up breaking down, went below the 50% level, bounced a little bit off of the 61, and then broke the 61. So it ended up selling off later. So once you find that top, we see that all the time. Whenever these stocks hit the top for the day, they'll get up there, boom, and then this is just what they do for the rest of the day. They just end up selling off down to where they're consolidating down here for the rest of the day. So if you catch the top on one, that's okay, because keep in mind, if you were able to trade this thing 2 or 3 different times using your fib retracement levels, and you were profitable those 2 or 3 times, and your profits are larger than your losses, right? That's what they're supposed to be, then it shouldn't affect you too much. And keep that in mind. Once it is a top, not near as accurate, and most of the time does not work. Okay, something else that we can expect when we're looking at these fib retracements, like we talked about before, is we're looking to expect where other traders are watching these levels as well, right? So we're looking for them to hop in that trade with us to give us some buy support. We're also looking to possibly find support at those levels, like I just said. And that's the reason that we're finding support, because these traders are watching that, be it the 23, the 38, the 50, 61, whatever that level is. And like I said, some will not enter unless it's perfectly right on that dot. Some of them just have that rule for themselves for whatever reason, maybe because it's of their back testing. And also we can look to see maybe when the trend is over, right? So, you may have a rule set for yourself that, hey, Doc, I set a rule for myself that once this thing breaks down below the 50% level, then in my opinion, that trend's over, right? Or maybe it's the 61% level for you, or maybe it's the 78% level for you, right? People I know will ask me, well, hey, Doc, what do you think that level is? Well, I start getting a little bit nervous below that 61.8 level. But keep in mind, I might be trading different types of stocks than you're trading. So, my level of comfort may not be the same as your level, because a 78.6 on a different stock than what I'm trading might be just fine. Might be just fine to break below the 61.8. You might very well see a bounce at that 78.6 and it just rally right back on up. That's why back testing is so important. Okay, so, and we also look for it to be working on the downside as well. So your fib retracements work on the downside just like they do on the upside. So you have this move here. Well, actually, let's take this move here, from here down to here, right? And so now what are you looking for? When you're looking for a down move, and you draw that just backwards, instead of starting from the low and then clicking at the low and clicking at the high, you just do it exactly the opposite. When you're looking for a short opportunity, you just find a nice, significant down move, right? And you click from the high to the low. And then you look for resistance at these levels. And this is what we saw here in this move. We saw it come back up off of this 0 level there, came back up and met resistance at the 50, sold right on back down. Would have been a nice short opportunity there at that 50% level. So they can be used for shorts just as well as longs. Okay, we also want to keep in mind once again that this 61% level here seems to be the most significant to traders. They even call it, or people call it, the golden ratio, that 61.8%. There's reasons behind that, and I'm not going to get into all that stuff because I don't think we really have time for it. But if you want to Google that, you can, and you'll get a lot of information as to why that 61.8% level is the most significant. And we can also, we can expect for it to continue to work until it doesn't work, right? So And a lot of times where we'll see that it doesn't work anymore is, like we talked about before, if we've hit the top for the day, which we never know that, or if another significant move takes place, right? And at which time, what would you do then when another significant move takes place? Well, you would likely dump your old fib retracement drawing and you would make a new one based on the new significant move. Maybe it made another higher low and another higher high, right? And it was a nice significant move. So you just redraw. You can always test them as well. You can leave your old one on there, put the new one on there, and see which level is holding. Okay, so now that we've gone through all of the talking part of this, let's get into actually drawing some of these on some stocks. So we did some here. I'm going to get rid of that and get rid of this one. Let's look at another stock. What else was running on Friday? I think APT had a nice day on Friday. Let's look at APT real quick. Make sure I'm on my fib retracements. I am. Okay, so we can, looking at this chart, we can obviously tell that this was a significant move here, right? So did we make a higher low? So here was our previous low, right? And here's our new higher low. Did we make a higher high? Here was our previous high. Here's our new high. So yeah, we sure did. So we made a higher low and a higher high. This is also a very significant move. Huge move there, right? Big move. So let's draw a fib level there. So we're going to go down here from the low to the high. This thing almost went straight up, didn't it? Okay, and let's see where we bounced. So we had this big move up here. Sorry about my drawing there. I'm doing this on a trackpad, not a mouse, so it's a little bit more difficult. Then we pulled back to the 38.2 level, bounced a little bit, came back down. Look where we bounced again, right there at the 50, right? Came back down, bounced in between the 50 and the 60.8, right here, see? And then we bounced back up, met some resistance there at that 23.6, and then came back down and bounced. Look exactly where we bounced down there. I mean, almost on the money on that 78.6 level, right? And then that's where we saw another pretty nice bounce there. So, just go through different stocks and, check them out and test this for yourself. See what they look like to you. See if they make sense to you. And see if it's something that you can implement into your trading plan. We're going to look at one more for those future traders out there. We're going to look at the S&P E-mini, okay? So let's take a look back here. Let's get on a 5-minute chart for this guy. All right. By the way, we were on a 1-minute chart for all of those previous ones. So this is a pretty significant move down here, right? Wouldn't you say? Pretty significant move here from this level down to this level, right? So let's see where we saw a bounce, or actually a pullback. So we had this big move from here all the way down to here, right? And then we come up and we bounce here. Met some resistance there, came back down, found some support again down here. Resistance in the same area once again. Still would have been a nice short opportunity, if you would have, would have caught that. Stayed in the trade, you would have been looking really nice. All the way back down, made a whole new low down there. So there's a short example. Let me get rid of this. All right, now let's find a long example. Let's take this move right here. This is a nice move. Let's draw this one from the low to the high. And let's see where we got some bounces here. So we came on up to this level here. We came down, tried to we tick-tock a little bit here just under the 23.6. came down. We actually bounced a couple times here off of the 38.2 level, but nothing significant. Ended up breaking down here to the 50% level, and then ended up breaking again down to the 61 level, which is where we ended up seeing our better move back up. So this is one of those ones where you might have got faked out a little bit. You know, had you taken this trade off of the 23.6, that would have been considered a fairly aggressive trade because your retracement wasn't quite as deep. It was much more shallow, right? And even if you took it at this 38.2 level, that's still not a super deep level, right? That's, you know, the first level of our levels that we really keep an eye on, the 38.2. So, but if you held on and said, well, hey, I'm going to be patient and I'm going to see if this thing keeps going down, right? So, and then you waited for that 50% bounce. Well, it still didn't work out that great for you unless you caught that for, you know, a pretty quick scalp. But when you came down here and made this 61.8 bounce, if you waited for this confirmation candle here, you would have ended up having to ride it back down, but the trade would have worked out for you right here on this move. And you could have been looking to, you know, this is where we had resistance before, right? Because this is where it sold off before. Well, guess what? Sold off in the same area again. So those levels, you want to keep that in mind. You know, let's say when it bounced off of the 61.8 level, you know, you want to make sure it's going to break through that 50. You want to make sure it's going to break through that 38.2, 23.6, this, you know, key support area right here where this blue line is. And then obviously when it gets back up and it's going to try and make a higher high, which it did, but just by a very small amount here. Since we had resistance there before, we can certainly have it here once again, right? And that's what we saw. So we saw that resistance there again and sold off down here. So as you can see, these things do work. They don't, like I said, they don't work 100% of the time, but they do work. And, you know, this is just something that you're going to have to back test for yourself just to make sure that, like I said, that it's going to work for you. It's going to work with your trading plan, going to work with your risk management plan, everything else. All of these indicators, indications, anything that you're hearing, you know, on YouTube or from a buddy or in a Discord channel, you know, you want to make sure and back test every single one of those, you know, before you implement them into your trading plan, right? Because, you know, you don't want to lose money learning a new indicator or strategy. You know, back test it first. And, you know, you may even decide to paper trade it, you know, a little bit. Or if you're not a big paper trader, hey, that's cool. You know, maybe you want to just buy one share or buy 5 shares and test it that way. You know, if you can be profitable on 1 share, you can be profitable on 10,000 shares. You know, I mean, green is green, right? I mean, as long as you don't let the fact that you're dealing with a lot more money enter into your mind, if you can make 1 share green, you can make however many shares you want to buy green. So keep that in mind. Okay, so we're going to go over this one more time on one more move here, and then I'm going to show you a little trick on extensions. We're going to have another session next weekend on extensions, but I want to show you a trick in case some of you guys may want to start using, may want to start playing with this next week. And if you want to do that, that's fine. This little trick will help you out with that. Sorry, I got a frog in my throat or something there. So let's take this move here. So are we at the top yet? Not yet, but we're getting close here. So, all right, where did we bounce here? Let's take a look at it. I haven't looked at these moves before, so they're all going to be a surprise to me. Okay, so we came back down here. We didn't hold the 38.2 level. We broke down below it, bounced up a little bit, broke down below the 50, came down, hit the 61.8, had a small bounce there, then a much nicer bounce here. Now, once again, you could have certainly scalped, you know, and you could have gotten out anywhere in these levels here, and you know, made a nice trade there, right? But eventually, we ended up retracing all the way back down to the 78.6 level and held really nicely there. But something I want you to keep in mind, this little blue line here, that's one of my support levels. So not only did we have this 78.6 fib level down here, but we had some support right there on that blue line. So I would have definitely been paying more attention to that level right there because it also had key support. It didn't just have a fib level. And look what happened off that. We got a really nice bounce back up to the 38.2 level off of that fib level and key support level. Really nice bounce there. Came back down, tested the 61.8 again, back up to the 38.2 until we finally sold off and broke down below. So and that's where we can consider that the move is likely. That's where I would consider that that particular move is all over. Okay, so let's do one more. Let's see here. Let's take this move here. So we're going to go from that low up to this high at 44.09, if I can get it right on my money. There we are. Okay, so let's see where this bounced. So nice big move up here, right? Came back down, and we didn't do anything because we ran out of time. But likely because this was a high of the day, had we kept going on, who knows if it would have broken that high again, but maybe it wouldn't have. But anyway, sorry about that one. I wasn't paying a whole lot of attention there. That was the end of the day. Let me get rid of these levels here. Okay, so let me show you guys my handy dandy little trick on Fibonacci retracements, or extensions, I'm sorry. So let's draw. Let me see if I can get some more room on the chart somewhere here. That's all it's going to give me. Maybe that 1 minute I'll have some more room. Yeah, a little bit. Okay, so let's draw some retracements here for fun. Not on any particular move, just drawing them in there. Okay, and let me show you what I've done. So again, we're going to edit. So we right-click or command-click if you're on a Mac. Edit properties. And what I've done here on mine is the three that I pay most attention to are those three levels. So I have them colored, of course. These other two levels, I just have them as gray dotted lines. I still pay attention to them, but I primarily focus on the ones that are colored here. And I have them colored, red, yellow, and green, yellow, and red. Just for a visual for me, so I know where it is. So what you can do here is you're going to have some other levels below this. Before I changed them, there were some other levels here. If you take that and you put these numbers in here, minus negative 0.27, negative 0.41, and negative 0.618, and you check those, which I usually have them checked, but I unchecked them because I wanted to stay with retracements and not touch too much on extensions. I didn't want to confuse anyone. But it puts your extensions there automatically, so you don't have to redraw them. So check this out. So this is a nice little trick. I don't know if you can do this on other platforms. Maybe you can, but it works great on Thinkorswim. So you don't have to go back in and draw your retracements. They're already there for you. As soon as you draw your extensions, boom, as soon as you draw your retracements, your extensions are already there. And I'll show you that they work. So let's go to our extensions here. And let's go from, I'm going to do it over here so you can see that they match up. So we're going to go from the low here to the high right here, back to the low, like we would on our extensions. And they match up perfectly, see? So you just put those negative figures there, and it's really, really nice. That way you don't have to go back, and if you do use extensions along with retracements, you don't have to go back and draw to do any more drawings. As soon as you put your retracements there, it's already done for you. And of course, you can add anything else that you want to add. If you want to change those figures, you certainly can, to change them whatever you want to. If you like other levels or whatever. And you see that I have mine color coded, so that if I pop off the green here, and maybe I'm looking to get to the green here for my max profit, yellow to yellow, red to red, set it up however you want to. Anyway, it's a nice little trick, so it'll save you some time where you don't have to draw your fib extensions separately. You can just have them on there with your retracements right off the bat. So I hope everybody enjoyed this video. If you did, please do me a favor and like the video and subscribe to the channel. It really helps me out with the YouTube algorithms. And I hope you guys have a great rest of your weekend. And as always, happy trading.